This is InvestTalk, independent thinking, shared success. Justin Klein and Steve Peasley stand ready to take your finance and investment questions and share their unbiased answers. InvestTalk is made possible by KPP Financial, a registered investment advisor firm serving clients throughout the United States. The clarity for your path forward starts now. Here is KPP Chief Executive Officer, Financial Advisor, Justin Klein.
Good afternoon, fellow investors, and welcome back to InvestTalk. This is our January 9th, 2023 edition of InvestTalk. We're moving into the second trading week of the year, and one thing is certain, that you are trying to make the most of your capital. Everyone is. You work hard in order to save consistently, and that's a huge part of it. If you've mastered that part, then you're able to focus on the next part, which is the investment side. And I emphasize this because too many people skip ahead and they focus too much on the investment side because that's sexy, it's fun, it's interesting. It's the reason I love what I do. But savings is the boring part. It's the more difficult part. Well, difficult in some senses. But it's crucial. There's a reason why most people's retirement assets are held in their 401k or the 403b or TSP, is because it's systematic. It's automatic. You don't think about it. It never hits your bank account. You don't see it to go spend it. And that's a lesson you have to embody, is that sometimes you just have to set up a system that will get you to save consistently. And then once you have that and you know that that is sustainable, you know that it is enough to achieve your goals long term, then you can turn to investing. And so as we embark on this new year, we're going to go over some checklists, but one of the big checklists you have to look at is, are you saving enough? Can you save more? And then we're going to work together to get your portfolio optimized and balanced based on your goals, your risk tolerance levels, making sure you're taking advantage of the right opportunities and you're avoiding the pitfalls. There are a lot of pitfalls in today's world. There's a lot of scams, especially in the world of crypto, right? The time of crypto and just internet. Look at, Andrew Tate and, what's happening there. And there's a lot of the Andrew Tates of the world. There are many of them out there on the internet, saying bombastic things, yelling loudly from the rooftop. And what we try to do here is be the antithesis of that. We're not the loudest. I'm not Kramer. I'm not banging bells and whistles. I'm just trying to give you the facts and perspective based on experience and data. And that's how you make good investment decisions. It's not because you watched some YouTube video or saw something on social media that was one-sided. There's a lot of that out there. It's one-sided, only talking about how great it could be without looking at the risks. And it's so easy nowadays to grab a camera, grab a mic. You can just do it on your phone, upload on YouTube, etc. But just because you speak the loudest just because you say it with the most authority and confidence doesn't make you right. Doesn't make your perspective more accurate. But unfortunately, in today's world, those people get the most eyeballs. So we try to do here is give you the most perspective and data. So I'm Justin Klein, and I'm here to help you develop your investment strategies and your decision-making process. That's really what it's about. It's not about giving you the answer to one question. It's giving you the decision-making process so that you don't have to call the show. That when you see an investment opportunity, you are assessing it properly based on its merits, based on the facts on the ground, not based on some bombastic prognostication. So I'm ready for your phone calls at 888-99-CHART, and I've got a lot of material for you today. My focus point concerns this timely question. Do you have a 2023 financial to-do list? Well, you should. And we're going to look at the checkpoints throughout the year. Now, time permitting, I also want to touch on a few other things. One is some data that higher rates and the tech sell-off means that people are still speculating on options. It's options boom out there. Maybe people lost enough money. Now they need to get back to even and they're trying to leverage themselves up. That's kind of what I'm seeing. So a lot of individuals out there just trying to utilize options to get them back to even. So we're going to look at data there. Also, corporate earnings season. We are heading into it here in the next week or so for the fourth quarter. What's the market expecting? So we're going to look at that. And then lastly, Wall Street wants capital rules eased for the Treasury market. And I think that is important. The Treasury market will be a very, very interesting and vital market to follow over the next decade. Because of the debt levels that we have, because of our massive deficit, and the fact that foreigners have stopped buying, and that the Fed is a lot more involved. Guess what? There's another aspect that's going to be involved. It's probably commercial banks. So we're going to look at that. But I have some voice bank questions ready to play as well. One is on the Vanguard U.S. Multi-Factor ETF and Duke Royalty Limited. So I've got this all planned for this episode of InvestTalk. And of course, I'm taking your calls live at 888-99-CHART. Now let's take a look at, actually, we're going to head into a quick break. And on the other side, I'm going to get to my analysis of the market for today. Now, I welcome your finance and investment questions now. No question is too simple or too complex. You set the agenda. So give us a call at 888-99-CHART.
In today's world, a variety of factors are affecting the stock markets. Serious investors know building a secure financial future requires hard work and determination. That's why now, more than ever, when it comes to the planning, execution, and maintenance of your portfolio, you need InvestTalk. With total downloads nearing 50 million, each InvestTalk podcast should be one of your key financial planning and educational tools. InvestTalk is a free download, and hosts Justin Klein and Steve Peasley stand ready to provide their unbiased guidance and professional analysis developed from real-time data research and years of investing experience. 24/7, rain or shine, during smooth sailing or on rough weather days. The InvestTalk listener line is open and waiting for your questions. You set the agenda. Don't forget to call InvestTalk 888-99-CHART.
You've got a portfolio to grow and protect, and this is no time to lose focus. So get your finance and investment questions together and call Steve Peasley and Justin Klein. They're ready with their unbiased answers. InvestTalk, 888-99-CHART.
All right, let's take a look at the market today. We were up early, and we closed down about 3 points on the S&P. The NASDAQ was up a bit, and what pulled back? Gold stocks were down a little bit, but gold itself was up. Let's see, the 10-year, that was down. that was down about 5 basis points. So you've had 2 days in a row, Friday and today, where interest rates have come down pretty nicely. And Friday, growth stocks didn't do very well. But today they did compared to the value side of the market. Almost all last week, growth stocks just were taking it on the chin, especially in relation to the value side of the market. But today you had a little bit of a snap back there. So interesting little one-day move, but that often happens. You get counter trend moves within a broader move. And let's see, what else? Anything else to note? I think that's pretty much it. Yeah, it's kind of a flattish day overall. The NYSE broad index, that was only down 25 points, but it did close at the lows of the day. Now, tomorrow, you do have Jerome Powell coming out, or the Fed, I think it's the Fed minutes, I believe that's what's released. And then, or is he speaking? I know there's a big Powell event tomorrow. I can't remember exactly what it is. But even more important, I think, is the CPI number that comes out on Wednesday or Thursday. Wednesday or Thursday of this week. So I always get there's so many of them they are thrown at you. You always forget what exactly is it that's happening. No, there's something that's probably going to move markets. But yeah, that was basically the market for today. Kind of flat in anticipation of really more important data from the Fed and from inflation here between now and the end of the week. All right. Now let's take a look. Are we going to go to a caller? What are we going to do? We're going to touch on our main focus point, which is your financial checklist. Going into the year, there's a lot to do. It can be daunting. But if you spread it out kind of month by month, you can have a plan and you can get everything you need to do done with your financial life. Now, it is January, and this is typically a time where you reassess what happened last year, reassess your strategy, and figure out whether you are investing correctly. You can't expect this year to be, you don't want to use 1 year, right? You don't want to say, okay, last year did X, these stocks did the best, these assets did the best, and these ones did the worst, so I'm going to sell the worst, I'm going to buy the best. That's not really how this works, okay? It's reviewing mainly, first off, your spending, or your saving, which ties into your spending. Now, you want to save about 15% of your minimum target of your salary. That's a reasonable minimum target. And most people this time of year, they're getting some sort of a raise. They know what to expect for their income for the year. So this is a good time to think about adjusting your savings up a bit. Now, if you're retired, you want to do the opposite. You want to look at your spending. Make sure that it was on track last year for your plan overall. You spend too much. Did you undershoot it? Maybe you can go on a little vacation. Maybe you undershot your spending expectations. And how does that jive with your withdrawal rate? Is it sustainable? And then you want to find the best return on investment. Now, that could be paying down debt if you have credit cards or any other type of debt. But the right answer to that capital allocation decision is really individual specific. Depends on, do you have any debt, what the rate is on that debt? What are your expected returns from your investments you're comfortable with? Are you an aggressive investor, moderate, more conservative? And you don't want to be reaching too far out of that risk bucket. Meaning, if you're a moderate investor, you don't want to, be reaching too much into the aggressive side of the investment world in order to achieve a higher return. You want to stay within your comfort zone. Then look at tax breaks you could potentially earn for the year. And revisit your 401k or retirement contributions. So IRA contributions are going up from $6,500 to $6,500 per year from $6,000. You still have a 7,500 limit, an additional 1,000 if you're over 50. 401k's limit still 22,500. So, well, before, if you were saving 500 a month in your IRA, now you can bump it to 541 a month and hit that $6,500 limit. Okay, so that's just the month of January. Maybe after the break, we will get into the rest of the year. So we're going into break. So give me a call at 888-99-CHART.
It's a new year, but you've got finance and investment questions, so Justin Klein is here and ready to take your calls live. InvestTalk, 888-99-CHART.
Before the break, we touched on the checklist for January, but let's quickly get to the rest of the year. Now, in February, you want to really hone in on your investment strategy for the year. What are you overweight? What are you underweight? Despite equities being down, bonds fell last year as well. So you might still be overweight equities. Then look at your tax documents. Tax day comes up quickly and you need to be prepared for it. So it's never too early to start getting those tax documents together. In fact, brokers in February start sending out 1099s, 1099s. There we go. And so you want to get those together, and you want to think about the tax strategy for this year as a whole. Are you going to bunch your deductions, for example, in this year? Sometimes that can be beneficial because the standard deduction is pretty high. So, you want to think about your tax strategy for the full year because you might want to start that early. So that's February. March, you want to contribute to your IRAs for the previous year. The deadline is April 18th, but you don't want to push that up to the limit. Plus, you want to get that money in there sooner rather than later. Remember, last year, $6,000 for your contributions. The $6,500 doesn't kick in till this year. So make sure you're contributing to that if you have not. In April, you want to probably, once you get done with taxes, maybe get rid of old documents that are laying around you probably don't need, that are maybe a decade plus old. Go paperless. A lot of brokers and banks, they charge a fee for physical delivery now. But that also means that you should have a master directory for all of your documents and accounts with, where the accounts are held, where to log in, name of the individuals you might work with at that institution, et cetera, and try to get that file encrypted so you're not subject to getting hacked. A big important date in April 18th is your tax filing deadline for your 2022. So it's not April 15th, it's April 18th this year. May, you should probably assess your emergency fund. Do you have enough? That's if you're in the accumulation phase. If you are retired, well, what about your liquid assets? Right? Sell in May, go away. And that thought, well, if you want to reassess, it's a good time to say, okay, I need some liquid cash. Maybe I sell some stocks, get liquid so I can afford, my expenses for the rest of the year. July, you might want to reevaluate portfolio. That's the halfway mark of the year. See what's working this year and what is not. August, maybe think about estate plan, dialing in the details there. Your beneficiaries in conjunction with that, and your 401ks, IRAs, we see that a lot. People having outdated old beneficiaries on their retirement accounts. September, the quarterly estimated tax payments, if you are self-employed, that's September 15th. In October, that's fall. Kids are going back to college. You might want to think about contributing to college funds for the year. November, insurance review. You have open enrollment for health insurance and other benefits, but it's a good time to think about term life if you have dependents that you want to make sure you take care of. And then December, time to gift, right? Charity contributions. you want to do a year in review of your portfolio and make sure you take those RMDs, and don't wait until the last week or so. Try to do that as early as possible, ideally, before December hits. So that's a good, I think, checklist throughout the year. Spread it out. You don't have to tackle it all at once, but if you do it consistently, do one thing every month, and I think it'll go a long way. Let's get to the InvestTalk voice bank for a question that came in earlier on 888-99-chart.
Hi, Steve and Justin. I was interested in buying some Greenbrier Company. Symbol is GBX, and I would like to get one of your opinions on it. Thank you very much.
All right. This is Greenbrier Company, supplies transportation equipment and services to the railroad and related industries. This is technically, it's not looking very hot. It's now clearly in a downtrend. I'm not sure what the earning was or the announcement was on Friday, but it went down in a big way. Opened the day or closed the day on Thursday right around, what's that, almost $35, and now it's down to 27. So it's down over 20% in the span of 2 days. Why is that? What happened here? They had earnings swung to a net loss. So that's one issue there. So the technicals, I think, are pretty poor. Earnings expectations for this year and next year are just shy of $3, which at $27, it's trading at about 10p, but it's now losing money. I don't like that. Return on equity, let me look long term. Right now it's only 3.7%. Long term, it only averages about 5 or 6%. Not that great. So I'm going to pass on Greenbrier. I've definitely looked at this in the past, and it looked attractive in the past, but I haven't looked at it in a while, probably many years. And since the last time I looked at it, its chart has gotten worse. It's been in a downtrend really since 2018. And the profitability metrics have been relatively poor. Made $5.73 in 2016, and now earnings are roughly cut in half since then. Why is that? I'd really need to dig into the details there, but I don't like that trend, so I'm going to pass on Greenbrier. Now we're heading into a break, and I'm ready to take your calls live at 888-99-CHART. We've started the new year, and I thought it might be a good idea to let you know about a new way to make your meal preparations easier. If you are ready to get farm-fresh, pre-portioned ingredients and seasonal recipes delivered right to your doorstep, HelloFresh was made for you. Now you can skip trips to the grocery store and count on HelloFresh to make home cooking easy, fun, and affordable. That's why it's America's #1 meal kit. With HelloFresh, eating well in the new year can be stress-free and delicious. With over 35 weekly recipes, they have the options you're looking for to help you achieve your goals. Choose calorie smart and carb smart recipes, or even customize select meals by swapping proteins or sides, upgrading your proteins, or adding protein to a veggie dish. When it's time for the game, you can home gate like a pro with a limited time and winning assortment of snacks, appetizers, and shareable sweets available at HelloFresh Market. Treat friends and fans to delicious barbecue baby back ribs, chocolate chip brownies, and everything in between. We all want to save money this time of year. But did you know that HelloFresh helps you save money all year round? HelloFresh is less expensive than grocery shopping and 25% cheaper than takeout. I found that it's actually a pleasure to cook with HelloFresh, and I like to collaborate with my girlfriend as we try various HelloFresh recipes. We agree that eating well is top of mind, and it's comforting to know we always get top quality ingredients with HelloFresh. HelloFresh ingredients travel from the farm to your doorstep in under 7 days. That's how you know they are fresh. So, go to HelloFresh.com/invest21 and use code INVEST21 for 21 free meals plus free shipping. That's right. Go to HelloFresh.com/invest21 and use code INVEST21 for 21 free meals plus shipping. Try it, and you'll discover why HelloFresh is America's #1 meal kit.
One of the most rewarding things I do each weekday is host the InvestTalk podcast. I truly enjoy helping investors, and I know that every question counts and every answer I provide will be unbiased. You, the caller, get to chart the course for each InvestTalk podcast. Call with your questions anytime, day or night, 888-99-CHART.
Hey guys, this is Josh from South Carolina. I'm a long-time listener. Today I had a question I wish you guys would look at. It's an ETF that I'm considering. It's a Vanguard U.S. multi-factor ETF. The stock symbol is VFMS. The thing that's a little bit different about this one, it's a actively managed ETF. My question, what do you think about the ETF itself, and at what percentage of your portfolio would you invest in something like this if you didn't really have time to manage something on your own? Thanks for all you do.
All right, this is interesting because it's an actively managed Vanguard ETF. Vanguard is all about indexing. So now they're getting into active management. Pretty interesting. So the fees are a little higher than your average Vanguard ETF, about 18 basis points, still relatively low in cost. And it is spread, let's see, multi-factor. Yeah, it leans in the value side of the market, so that's a positive. Its tech exposure is only about 10% versus in the S&P's well over 20. Energy here is 15% of the portfolio, which I like. Industrials 9.5%, pretty good. No real estate. Basic materials only 5%. That's a little low for my liking. Financial services 20%. That's positive. So I like this overall. It still is very widely diversified. 571 different names. Very interesting. I mean, not a lot of concentration there. And it's kind of a mid-cap ETF. It has a lot of large, small, and mid-cap names. I think it's fine. Its track record, let me look how long it's been around for, because Vanguard hasn't been, if they've been doing active, it hasn't been very long. Yeah, 2019 is when this started. Had a great 2021 and 2022, but so far this year underperforming. 2020 and 2019 underperforming dramatically. So this is just okay in my book. I like that it's on the value side. I like the sector allocation much better than the broad indices. But the track record is not long enough, and the track record that it does have is pretty choppy. So, I'm just going to give it maybe a 5 out of 10 on a scale, but certainly better than just buying the S&P. Thanks for the call. Now, when people take the time to leave InvestTalk podcast review on iTunes, we like to thank them for their courtesy by getting to their questions quickly. The Puma51 says, I've been buying this on the last dip, and I was curious if you think I'm making the right play. It's a small portion of my portfolio. I'm planning on holding it for at least 2 years. I believe WTI, is the symbol. WT offshore. Now, okay. Here's what the offshore drillers are the most aggressive play that you can make within the space. And you have to be comfortable with that risk. Offshore drilling is incredibly complex and expensive. And you can't just kind of stop and start whenever you want, like you can with most other drills on land. There's a very expensive and cumbersome process to plug the holes and just stop pumping. And so what they do is they just tend to stay online, and they're price takers, and their costs are much higher, right? So during the boom times, their profits go up significantly because they have a high base cost to pull oil and gas out of the ground in deep waters. And so suddenly at, say, $100, they're making decent profit, and then it goes up dramatically once you start getting well over $100 per barrel for oil. Whereas traditional wells, many of them are profitable they are break even at $30, $40 per barrel. And so you go from $100 per barrel, you're already making good money, and going to 120, it's a decent increase, but nothing dramatic. So there's that operating leverage that you have there with these offshore names. But when prices go down, they can stay down, and guess what? They keep pumping while the rest of the industry can stop. They can cut off their wells, right? But they're pumping at loss-making numbers. And so it's just a very boom or bust industry. And you can see that from its cash from operations. It goes from losing money all the way to making a ton of money, depending on the oil environment. So it's an aggressive play, and you can see that with the volatility of the name long term. I think it's okay, but you really, really, really need to be comfortable with the volatility. Just like recently, it went from 9 all the way to 5 in the span of 2 months because oil pulled back. Are you okay with that volatility? Exxon, in that same time, was down modestly. It was down 3 or 4%. So you can see that. Very, very different type of oil exposure. Let's go to Roger in the Bay Area looking at Suncor.
Hi, Justin.
So you're looking at Suncor? You're looking to buy it, or do you own it?
No, I have been researching on Suncor for some time now. I'm really interested in the fundamentals look good to me, but just wanted to see what's your take on it. Does it play good into one's portfolio, which is looking for energy exposure?
Well, this is Suncor is an integrated Canadian energy company. It operates oil sands, production and upgrading, offshore oil and gas, petroleum refining in Canada. So it has that downstream aspect to its business. And it is investing in renewables and hydrogen. And so it's a good name. We've researched many of these within Canada. Suncor is good, but there are 2 or 3 others within Canada, Canadian oil names, that are much, much better. Historically they operate more profitably historically, and they have a much better asset base, the type of assets that they do own. So, I like Suncor, but I like some of the other Canadian ones a lot better. So I'd keep looking. I like where you're looking. I like that you're looking in Canada, but this is not at the top of the list. Thanks for the call. 888-99 chart, 888-992-4278. Let's touch a bit on some sentiment within the options market. And what's interesting about the option market today is that it's similar to what you saw a year or two ago when everyone was betting on meme stocks and AMC and things like that. But in some ways, the inverse. So it's similar in the fact that the weekly amount spent on new option purchases and sales were above $40 billion for 4 times in the fourth quarter for 1 week. And then the average is less than $10 billion through the first 3 quarters of last year. So the fourth quarter, option activity picked up big time. But instead of call options, right, betting on upside, it's now betting on the downside. It's buying put options. And so the boom in the options market over the past few years is continuing. It's just people are speculating the other way, and that just shows you the sentiment, how quickly the average investor is chasing the returns. And trading activity in the option market set another record last year. 41 million contracts changed hands on average every single day. And now you're getting more and more short-term options. And as you know, if you've been listening for any length of time, and if you have heard my advice on options, if you're going to buy options, you want to be going out long-term. Talking months because of option decay. Well, guess what? The average investor hasn't gotten that message, and they keep buying these short-dated options, many of them expiring within a few days, right? Weekly options. And as a consequence, the CBOE's put-call ratio Went up to 2.4%. That's a record. And it was up to 1.5 for the first time ever in December. Now it's at 2.4. Historically, it kind of oscillates between 0.5 and 1. Occasionally spike a little bit above 1, a little bit below 0.5, but that tends to be where it sits. Now it's at 2.4. Just shows you the demand for, you call it downside protection, but I think it's just speculating on the downside. But it's a little glimpse into sentiment, especially for the average investor chasing those returns. Let's go to Nick in Manhattan Beach. Wants to look at AWEVF. AWEVF. Let's see. What is this one? Alpha Wave. Alpha Wave.
Justin.
Can you tell me about Alpha Wave?
Yes, it was incorporated in 2017, and they went public in the spring of 2021. They license intellectual property to semiconductor designers and fabs, including Taiwan Semiconductor, Intel, and Samsung. They're growing revenue over 140% a year, earnings per share and free cash flow about 200% year over year. And they're run by former Intel executives and also the founder of Marvell, Seihatsu Tarja. So it's a pretty big dog, heavyweights running the company, growing very rapidly, and clearly they have operating profit leverage. It's a little hard to do due diligence on this company, so I was wondering what your opinion was. Thanks.
Yeah, it is hard to do due diligence because it doesn't look like where they located. It's not listed on a major exchange. I'm having trouble just getting data here. It looks like, Great Britain. So it's...
Yeah, the LSE.
Yeah. Oh, it's located. The business is located in Canada. That's where it is. Okay, so it's a Canadian company. Engaged in the development and licensing of high-performance connectivity and intellectual property for the semiconductor industry. Connectivity IP cores, integrated product IP cores, and chipset IP cores. Okay. Yeah, I mean, this is one you really have to do a deep dive on. It sounds like you've done a lot more work than I can do right now. The data on the performance of the company, at least their cash from operations are positive. The free cash flow is already positive. If you look at their revenue growth, it looks pretty solid. They don't have much long-term debt, so I like that. They haven't piled on a bunch of debt here. Their shares outstanding 690 million. That's gone up recently, obviously because it went IPO, but not to a significantly dramatic amount. It's a very interesting one. Let me look at the chart. See if I can pull the chart up. Yeah, I mean, there's very little volume here, trading at $1.35. Typically, I don't like these names just because there's not a whole lot to work with. You said it's hard to do diligence. You're absolutely correct. Most traditional research platforms aren't going to give you much data, if at all. You're really going to have to dig into, their reports that, they're putting out. It's a Canadian company. It's once again, I don't see it listed on a major exchange. So, how difficult is it to buy? There's not a lot of regulation around these type of names, right? The pink sheet names and what they're saying. So you really have to take them at their word, which can be difficult for a new company. But it's interesting. I'll tell you that much. And I like that they're now profitable. They have good operating margins already. But how real is this and how sustainable is this? I'd really have to do a deeper dive. But it sounds like you've done that. So if you feel comfortable with it, putting a small amount is fine in my mind. But you have to really understand and know the business. Now let's pivot back to the InvestTalk voice bank for this question at 888-99-CHART.
Hey there, this is Lauren from North Carolina. Got a quick question about Duke Energy, ticker symbol DUK. I've had it for quite some time now and have been thinking about selling. I just wanted to know what y'all thought where it was on the stock as a whole, whether to keep or to sell. I'll be listening. Thank you so much.
All right. This is Duke Energy. Had a big sell-off in September and October and has rallied back nicely. Hit a low of about $84. Now it's up to 105, but its 52-week high is up around 116. So it's had a nice retrace. Let me run a fib here. Yeah, it's gotten above the 618. So that's a positive. Technically, it's above all the major moving averages now as of Friday. It closed there Friday and confirmed there today. So that's a positive. From a valuation perspective, it's about fairly valued. So it's not cheap. It's not expensive. If you're looking for utility exposure, this is one of the better operated ones out there. I think that's what you have to think about, okay? How much utility exposure do I have? How much do I want to have in this environment? And Duke is one of the largest, most consistent, well-run utilities out there. So I wouldn't be selling it unless you are, for some reason, you want to just get out of utilities or reduce your utility exposure and you feel like there are other ones that are better. But, you know, it's, once again, it's fairly valued and it's fine. The technicals have improved dramatically. This is InvestTalk. I'm Justin Klein. We have one goal here is to help you achieve your own version of financial freedom, and our work continues after this final break. So if you're going to call, you want to do that right now at 888-99-CHART.
Justin Klein and Steve Peasley are ready to take on your finance and investment questions. So don't forget to call InvestTalk 888-99-CHART.
Let's go to Richard in the Bay Area looking at Advan 6 ASIX. Can you tell me more about it?
Yeah. Hi, Justin. I was trying to add more industrials to my account. Mm-hmm. And this one checked a lot of boxes. Okay. It's a tiny company. It's a small company. Mm-hmm. Good margin, reasonable margins, reasonable numbers just in general. Mm-hmm. And it looks cheap still. So just want to make sure I'm not missing anything.
Well, I don't think you're missing anything. It is going to trade at a relatively low multiple. It's doing well right now. A lot of it has to do with, I know you're probably looking at it and saying, okay, it makes, it makes polymer resins and engineered plastics and fibers and filaments and films and things like that. And that's a good business. But what's really boosted their earnings recently is their production of fertilizers. They do make fertilizers, and that's definitely helped them, which I like overall. And long term, its return on equity is about 20. Right now, it's about 25, so it's probably over earning just a bit. But you know what? I kind of like this. I kind of like it. I like the diversification. It has pulled back, but the technicals are improving. So I'm going to give A6 a thumbs up. That's Advan 6. ASIX is the symbol. Thanks for the call. Now we're heading into earnings season, and so far for the fourth quarter profits, they're projected to drop 4.1%. So that'll be the first drop in earnings since the COVID pandemic started. And analysts have been trimming their earnings expectations throughout the quarter. And investors are really not going to pay too much attention to the fourth quarter. It's really going to be about what leadership says about the year ahead. Is there going to be a soft landing or a hard landing for different sectors and different companies? Some companies will experience a soft landing, others a harder one. Same with sectors. So the big question is, how long can consumers continue to spend? How long can companies pass on the higher prices and higher input costs? And so far, you've had a mixed picture from those that have reported earnings. Nike, for example, they bumped up their sales outlook as they were able to work through some of their inventory overhang. But then there's companies like Constellation Brands, they cut their profit forecast because consumers kind of balked at their higher prices for their beer. And then you have the big tech giants. They're laying off a lot of workers. And the big question is, when will the ebbing of spending within the tech sector, meaning online sales, online advertising, that's clearly reverting to the mean? Where is that? Is it going to level out at the mean, below the mean for a while? That'll be a big factor into how the market reacts. Now, the energy sector is expected to grow earnings by 63% year over year, the best sector overall in the fourth quarter. The worst are going to be materials and consumer discretionary. They're going to have the greatest profit decline. The analysts are expecting have marked down earnings for the fourth quarter by 6.5% throughout the quarter. This is typical. It's typical for analysts to slowly lower their earnings expectations as the quarter goes by. But this has been a much sharper revision than average. So that gives companies a lower bar to clear, but tougher to work with from an operating environment for the full year, which they're really going to start to discuss, right? What to expect for the full year 2023. And analysts are expecting a 4.7% rise in earnings for 2023, about in line with last year, and that may be a bit much to ask. Well, I think that does it. That completes another episode of InvestTalk. Steve Peasley and I thank you for listening, and we encourage you to tell your friends and family about our free podcast downloads, which you can find anytime at iTunes, Spotify, or Google Play. And we are now over the 48.7 million mark, thanks to you. Independent thinking, shared success. This is InvestTalk. Good night.
InvestTalk is a trademark of KPP Financial. Because of the nature of the interactive dialogue inherent in the format of this program, it's important for the listener to understand that not all comments made will apply to them. Specifically, nothing said shall be taken to be investment advice, or shall statements on this program be considered an offer to buy or sell security. Because such advice is rendered solely on an individual basis and at times will require that the investor review a prospectus before investing. InvestTalk is a copyrighted program of Klein, Pavlis, and Peasley Financial, a registered investment advisor firm which retains all rights. For more information regarding KPP's investment advisors, call 1-800-557-5461. Steve Peasley is president, and Justin Klein is chief executive officer of Klein, Pavlis, and Peasley Financial. Thank you for listening, and your comments and questions are welcome on our 24-hour listener line at 888-99-CHART.